Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and thank you for joining us on Trading Hour. I'm Surabhi Upadhyay and with me is Prashant Nair. It's a little easy this morning, this Friday, you could say that. The market has been sluggish. We had all kinds of cues that weren't in support. Asia was sulking. We've had the bond yield issue with the yields rising, the hawkish commentary from the RBI. So all that has kept a tight lid on gains and very interesting balancing act playing out. So your banks are pulling this thing on the way down. But then there is IT and the kind of, intense buying that we're seeing on stocks, of course, including the star of the morning, TCS. That stock's actually still up 6% and counting. Some heavy ticket buying on the IT part of the market once again. Today, we've got a lot of ground to cover. Lots of interesting analysis coming your way. But first, let me start by saying hello and good morning to Prashant. Morning, Prashant.
Hi, Surabhi. Good morning. By the way, and we were discussing this, if you remember, last Friday, that the markets had 3 weeks of uninterrupted run, right?
Yeah.
And we were wondering whether we'll get another one. But even if we end the way we are right now, the Nifty down about 16, 17 points, for the week, which is Friday to Friday, we'll actually be up about 70 odd points.
Yeah.
So it's not such a bad outcome after all. I mean, 4 weeks uninterrupted run higher from the lows. I don't think that is something to really scoff at. And this week has been, not as eventful, even in terms of global developments, geopolitics, etc., like the last one was, or the week before that. This has been more quiet, more tepid.
But if I could come in over there and just offer a caveat, actually, I was just thinking about it. There have been several so-called headwinds this week. Oil continues to be a story, bond yields are still a story, and yet the market hasn't broken down. So, I'm with you on what you're saying.
Absolutely. I think oil is the big one. I think last week also went higher. It crossed some important near-term trend highs, and it's sort of not broken down. There was one view that oil prices will start to reverse. It's not happened. At least what we've seen so far over the last couple of days. So for now, 10,547. We're down today, but we're up about 70 points for the week, Friday to Friday today. Let's see where we stand from here. I just want to begin by quickly setting up with the CLSA quotes, which this is greed and fear. Christopher Wood travels, I think, around the world and writes from whichever city he's, he's right. The country in focus essentially is where he's based out of. So I guess he's in Mumbai or in India. And this is what he writes. Let's put the quote quickly up. I thought it was interesting. And I'm being told that there is an issue.
Okay,
so
I think we'll have to get back to that quote. Oh, there it is.
Okay.
There you go.
I think we can go on. Yeah, let's do this. So Greed and Fear observes in meetings with local institutional investors in India this week a healthy lack of exuberance. He says India has certainly not been the flavor of the month so far in 2018, with a bond market sell-off and concerns about renewed rupee weakness on the back of rising oil prices and a rising current account deficit. There is also much talk of fiscal slippage amidst fears of a resurgence in populism ahead of the general elections due in 2019. I think in those two sentences, he's pretty much summed up all the fears. And then he goes on to say the Indian story would, in Greed and Fear's view, be badly damaged if the formidable Narendra Modi was not re-elected in Greed and Fear's view. But according to them, it is still too early to pontificate about next year's poll. So I think it sort of nicely, he's not saying anything new. He's been one of the early and strongest bulls and the backers of this India bullish stories. And there have been others. I heard Mark Mobius recently on the CNBC US, and they asked him what which he thought was the sort of most exciting market. He said, well, China, but then India. So, but Christopher Wood is a well-respected voice, and he's essentially saying that, and he goes on, there's another quote, but he basically makes the point that he's extremely bullish about the India story. And maybe, all these concerns notwithstanding, he's not making a call for what the market does in the next 6 months, but he remains pretty bullish about the prospects. But elections 2019 would be pretty important to track. Too early to take a call, is what he's saying.
Oh, yeah, that's right. So let's actually get down to today's action. And as we go across to our technical experts, we should also pull up the contribution plate, because that will tell us the way TCS is counterbalancing a lot of the negativity on the banking side of the market, the whole bond market impact that's playing out. So very, very interesting sort of checks and balances out there. There we go. That's the plate for you. So 25 points straight away coming in from TCS, throw another 21 from Infosys. That's a solid sort of impetus coming in from the IT side of the market, and it's making up for a lot of the weakness on the others like Reliance and some of the banks there. Mitesh Thakkar with us this morning. Mitesh, good talking to you. So how are you reading the picture so far? Down, but not exactly out right now, would you say?
Yeah. Good morning. So, we've been calling for consolidation in the Nifty, and I think what's happening is that the bank Nifty is correcting and the Nifty IT is going up, as you were just showing that plate. I think very clearly it's a market of two halves. Mid-cap and banks and financials are correcting, but I'm still quite positive on IT as well as some of the FMCG names. So I think this kind of sectoral rotation might continue for next few days, and this choppiness will be there. But broadly, Nifty doesn't look weak until we start breaking 10,460, 470, and on the upside I've been highlighting that 10,600, 620 would be a very difficult level for us to get past. So I think after a good rally, I think it requires maybe a week of consolidation.
What would you trade, Mitesh, morning?
Yeah. So on the trading side, right now I think I have two buy calls. Oil India, I think clearly the crude price effect is showing up. That's a buy. Keep a stop at about levels of 223. Look for 235 as the short-term target. And second stock, Ashok Leyland, quietly I think it has started to make a fresh high. Not many people have noticed that today, but the stock has managed to get past the earlier highs of 151, 152. So keep a stop at 151. Look for the rally to extend about 160, possibly 165 kind of levels.
Okay, Mitesh, we've got some viewer queries. If you could please take them up. Dhruv has 387 shares of Eicher Motors. He's been holding on to these shares since 2015. He should be a very happy person. Wants your view on this stock. Mitesh, what do you think? He's been in it for the long haul, Eicher.
In fact, this entire rally started in 2009. The stock was at about 300 rupees and now it's at about 30,000 rupees. But now is the time when the stock is for the first time showing that signs of tiredness on the longer term chart. So typically, when this kind of patterns or setups happen on the long term charts, the stock could possibly go into an extended consolidation after a 10-year of rally. So my sense is that we might see a range of about 27,000 to about 32,500 on the upside. So if the gentleman has a view of another 12 months, I think then he should try to exit it near the upper end of the range. Else, I think hold on with the stop loss revised below 27,000. So 26,500, 26,200 is what I would recommend, and continue to enjoy the ride if the time horizon is more than a year. After he's been holding the stock for nearly about 30 months now.
Okay, Mitesh, we speak with you soon again. Thanks very much. Appreciate you joining in with that perspective, those ideas. We get some F&O trading strategies as well. Krish Subramaniam is with us. He's co-head equity advisory at Altamont Capital. Krish, what are your trades?
Yeah, hi Prashant. To begin with, the Nifty, the momentum should continue. That's our belief for the series, and recommending buying of a 10,500 strike call. That's quoting it around 80. Keeping a modest target of 125, 130, one could keep a stop loss of 40, 45. And stock-specific TCS, which has led the market uptrend today, we're recommending buying of 3350 strike call. That's quoting at around 45 to 50. Keeping a target of 80, maybe one could keep a stop loss of 25. The last one is a strangle in Hindalco. One could buy 250, 260 strike, 250 strike put and a 260 strike call. But the total cost comes to about 6 odd rupees. Keeping a target of 11, one could keep a stop loss of 3.
Okay. All right, Krish. Thank you so much for that.
We got the market, which is right there. There's not very much change. 15, 16 odd points lower is what we've got, 10,550. So we got you trades both on the charts, and the futures and option stocks as well. Let's get some commodity action now. Sumit Bagadia is with Choice Broking. He's now joining in. Manisha, of course, our colleague who handles the commodity segment, is busy at a conference in
New Delhi, I believe.
Delhi.
Yeah.
And I think we'll cut to it as well. She's hosting an agriculture panel, so that in a bit. But Sumit, you have us to deal with. Why don't you run us through what's top of your mind as far as commodities go, and what would you trade?
Hi, good morning. Yeah, I have few commodities wherein we can trade in. The first one is from energy space, and that is natural gas. Natural gas is looking good on charts. From here on, there is a possibility that we might see a good upside move in which we can see levels of around 182, 184. So for a trading perspective, one can initiate long positions in natural gas at current market price with a small stop loss to be placed at 172 levels on lower side for the upside target of 182 and 184 levels in next couple of days. The second pick for the day is from bullion space, and that is silver. Silver has given a very good move in last couple of days. Looking at the chart, it seems that some correction or some profit booking can be seen from present levels, but such profit booking should be used as buying opportunity because overall the structure is looking very good. And after a long time, silver has given such a breakout move. Looking at the chart, it seems that from here on we can see a move of around 700 to 800 points. So for a trading perspective, one can initiate long positions in silver, make contact at around 4,200, 4,300 levels with a stop loss to be placed at 39,700 levels on lower side for the upside target of 40,800 as the immediate target, and overall in next couple of days we can see silver headed for 41,000 levels. The third pick for the day is from metal space, and that is lead. Lead is looking good. Till that time, lead is not able to break 151 on lower side. One should be on buy side. One can initiate long positions in lead at the current market price, with the stop loss to be placed at 151 levels on lower side for the upside target of 157 and 158 levels.
Okay, all right, Sumit. Thanks so much for giving us those trading ideas on the commodity side of the market. We'll get back to equities now. And of course, the big headline this morning is coming in from TCS. The company has recorded a good set of numbers for the fourth quarter. 3.9% growth on the dollar revenue at the top line. CNBC TV18's Reema Tendulkar caught up with the management on the growth outlook this year.
We are happy that we are on a double-digit trajectory. So we have broken into double-digit on a dollar terms. On the constant currency, it is still work in progress. Our focus, our determination, everything is to try and get to the double-digit mark on all parameters, whether it's constant currency or dollar denominated. But we'd rather wait for the next few quarters before we actually commit to that number. But we think that there is an opportunity out there. The other weak sector was retail. In retail, we actually have the deal wins, and the pipeline is also very strong. So we see much more direct visibility in retail, and we are quite confident that retail should be able to deliver a double digit in the year. And that's where the other underlying confidence is also coming. So we are now narrowed down to BFS. We see opportunity in the BFS side of it. We have restructured. We have got our teams set up properly for it. Retail, we see a fair amount of turnaround coming, with the more traditional retailers actually putting up a very good fight against the so-called e-commerce pure play plays, online giants. So we are seeing, and this is really our sweet spot, where we are actually helping them leverage the entire spectrum of technology and take their assets on the ground and repurpose it in a manner in which it is able to deliver a value to their clients which is beyond just price.
We have also talked to our clients, right? I think, beginning of the year, so we went and talked to them. We believe that their budgets are holding good in the IT side of it. In the operation side of it, they are increasingly adopting automation, and they may be, they are expecting about 10 to 15% productivity over there in the operation side. So we believe that there is a reasonable amount of opportunities for us to play. Contrary to the co-located agile that they were practicing, increasingly they were moving towards a more location-independent distributed agile methods, right? Which should give a chance for us to play in a much bigger way. That's the first point. The second point is that we are seeing enormous amount of demand, in areas like security, in areas like digital, in areas like blockchain, and so on, right? So coupled with these two things, I think, we believe that we have bottomed out. And the third is that we have also talked to our clients, right? I think, beginning of the year, so we went and talked to them. We believe that their budgets are holding good in the IT side of it. In the operation side of it, they are increasingly adopting automation, and they may be, they are expecting about 10 to 15% productivity over there in the operation side. The cautious side of it is that, look, we'll wait for one more quarter and confirm that the banking financial services is really, on the upward tick for us.
Okay, so it'll be 6% on TCS.
Yeah.
I mean, it's tough to get your head around that.
And this
one,
is
right? I mean, it's a big one.
this is not a stock that was underperforming, and therefore it's a big surprise up move. I mean, this has been a leader, and it's been the counterweight to banks, and it's just going on building fresh blue sky territories for TCS.
Is it possible to show the market capitalization on the screen? I think everybody's waiting for that $100 billion.
Yeah.
Right?
There's still some time away from that. They're about, I think, 6.5 or so. So I mean, 100.
A little bit more to go. A day more, and then you're there. $100 billion, and I mean that's some number to sort of look at. Okay, so that is TCS. It's 1.5% away. So yeah, I mean, right on cue. There's the flash. 1.5% away from getting to $100 billion, and it's gained over 40,000 crores in market capitalization post the fourth quarter earnings. Boy, that is something. And of course, when that happens, I mean, you'll know. We'll make some noise about it, as we should. 3,388 on TCS. But while we wait for that to happen, let's also focus on some numbers which are going to be coming our way. Indiabulls Housing will report its fourth quarter numbers today. It's an important company, well-tracked, widely owned. Abhishek is here to tell us what to expect. Abhishek, over to you.
Well, Prashant, they are more like Rahul Dravid, consistent in their performance across quarters. So loan growth between 30 to 35% will be positive. Last quarter, it was at 32%. Now, the gross spread, that is the difference between yield on the book and cost of funds, that anything above 3.1% will be positive. Last quarter, it was at 3.22%. Their asset quality has largely remained stable. So gross NPA below 0.9% will be positive. Last quarter, it was at 0.77%. Our polls suggest an NII and PAT growth of around 24.5%. Expect the numbers to come out after the market.